Hi everyone, I'm Gabby.
And I'm Jay.
And this is our journey to retire all over. On this channel, we are sharing our experience as we get ready to retire in 6 years or so, and then spend the rest of our lives exploring the world. Today, we're going to talk about a very odd thing that happened recently in the stock market. What is all that GameStop and Robinhood nonsense taking over the news? It's a pretty complex topic, so we'll need to explain a few things to get to the underlying cause and what the effect is. We'll talk about Reddit, a specific subreddit called Wall Street Bets, GameStop, short selling, Robinhood, and what happened, and specifically what impact it had on our investments. But first, please smash the like button to help us with the YouTube algorithm, subscribe, and hit the bell to be notified whenever we post new content.
Well, let's start with Reddit and what is r/Wall Street Bets. Well, Reddit bills itself as the front page of the internet. It's a group of communities of interest. These communities are gathered in places called subreddits, /r. There are subreddits for literally every conceivable topic. Are you interested in, say, Japanese art? There's a subreddit for that, r/Japan art. What about solo travel? r/solo travel. Or maybe you like literally gambling with your money. Enter r/Wall Street Bets, also just called WSB. WSB is a subreddit where people place bets on various markets, usually with things like option trading, forex trading, short selling, or other risky market maneuvers. They discuss amongst themselves what bets they're making and what is their expected outcome.
The other big name on the news is GameStop. What is it? For those of you born in the new millennial,
gather round the snack chat, children!
GameStop is a video game store that sells new and used video games and systems, as well as merchandise through their ThinkGeek brand. In an era when video games are mostly digital only, and in fact, some consoles don't even have a way to play disc games anymore, coupled with the current pandemic, GameStop revenue continued going down. They have been posting a loss for years, and for context, shares of GameStop were over $56 in November 2013, then fell to under $4 in March 2020. A 93% decline like this, along with increasingly bad forecasts, made a lot of hedge funds and investors take notice as they expected them to go out of business, and so many of them began to short sell GameStop shares.
But what does short selling mean? Well, it's basically a gamble. Let's say Acme Corp stock is worth $100 per share, but you think it's going to drop down to $50 a share soon. So you short sell the stock. You borrow one share of Acme from a brokerage firm and sell it immediately at its current value of $100. Yes, you can sell things you don't own on the stock market sometimes. Because you didn't own the stock that you sold, you have to buy one share of Acme Corp stock and return it to the firm you borrowed it from plus interest. This works great if the stock value goes down. Let's say the stock goes down to $50. You buy that one share again for $50, return it to the firm, and you make $50 profit, minus the interest, of course. That's pretty great, though. A return from the market going down is incredible.
But suppose the opposite happens. What if Acme Corp has something new and cool and the stock goes up? Well, now you still have to return the share you borrowed. If the stock goes up to, let's say, $125, you now have to buy that one share for $25 more than what you sold it for. So you didn't only lose $100, now you are at a $25 negative. That's why we say it's a gamble. You're gambling that the particular stock will go down. What if it doesn't? And imagine if instead of one share, you are short selling hundreds or thousands of shares. The risk!
And that's where things started to get interesting. See, someone noticed back in August that the majority of GameStop stock was short sold. And we're talking like 84% of all GameStop stock was short sold by institutional investors and hedge funds. You know, the big banks and groups who keep getting richer and somehow always get bailed out. Anyway, they had short sold the stock at a $7 price. That means in order for them to make a profit, the stock had to go below $7. Well, once the short selling information became public knowledge, GameStop stock shot up somehow like crazy. 22% one day, 28% the next. It sure took Wall Street by surprise. Well, as it turns out, a significant portion of WSB, remember that subreddit? Well, they banded together to buy up as much GameStop stock as they could, hold it, and prevent those shares from being used for short loans. That's what made the GameStop stock price shoot up. They created what's known as a short squeeze, which is when short sellers are forced to sell immediately and cut their losses as the stock they're trying to short continues to climb instead of going down. Several large hedge funds who were short selling GameStop had billions of dollars in losses as the stock shot up to its high of $468.39 on January 28th.
It was a total act of rebellion against the big man. Once WSB realized that it was all large investors and hedge funds, they bound together to make Wall Street lose. They got enough individuals to join them in creating this short squeeze and have these powerful groups lose significant amounts of money. For WSB, it didn't matter if they won as long as hedge funds lost. A true David and Goliath story.
So, where does Robinhood fit into all this? Now, you may have heard about Robinhood and a lawsuit against it with regards to GameStop. Robinhood is a free investing platform whose mission is to democratize investing. They launched in 2019 and have over 13 million active users. Thanks in great part to them, most investment firms have dropped fees for trading stocks. Cool. What they did, however, that was not cool was that on January 27th, in the middle of all this mess, they suspended buying of GameStop. They'd only let you sell shares you already owned, not buy. Because Robinhood stopped its customers from investing, while other brokerages didn't.
And they also happened to use a platform from one of the investment firms who lost money.
Robinhood is accused of trying to manipulate the market to the gain of the investment firms and the detriment of their customers.
Not cool. So, how did this affect us? Well, it didn't affect us at all. We didn't gain from it. We didn't lose from it. We don't play that game. Short selling is the opposite of what we are trying to do, which is long-term investing. We are betting on the market to go up, the whole market. Short sellers bet on a specific stock to go down. It's a very risky business because it exposes you to theoretically infinite losses. If you're investing in a stock or fund long term, the most you can lose is 100% of your investment. That sounds bad, but regardless of anything, it can never go below zero. However, if the stock you are short selling goes up, there's no limit to how high it can go or how in debt you can get.
Citron Research, for example, lost 200% of their investment. Melvin Capital, a well-known hedge fund, had to borrow $2.75 billion to pay back the stock they borrowed to short sell. We're not about that life. There's just too much risk for us. Instead, we'll stick with our plan of investing in total market index funds and allowing time to work for us. For more information on our plan, check out our video, What to Do with Your Savings Today.
2021 is already getting out of hand. What do you think about hedge funds losing billions of dollars? Do you like to gamble with your money on WSB? Do you earmark some of your investments to do crazy things like day trade, short sell, or forex trading?
Well, let us know in the comments below. Follow us on social media or our blog at GabbyandJaysJourney.com or RetireAllOver.com. Please like this video, subscribe to our channel, and hit the bell to be notified whenever we post new content.
Until then, please stay safe, do your part, take care of one another, and thank you for joining us.